It's extremely important to understand how to take profits in crypto. Here is the holy grail for profit taking in crypto. The promised land where all of your profits are realized and none of your gains are foregone. So let's get into this guide, crypto profit taking. So the first question you need to ask is, what is your investment strategy? So I've broken this up into short-term and long-term. On the short-term side, we first have a short-term trader who is looking for the fastest return. This is someone with a high risk tolerance and someone with money to lose. Don't we all wish we had money to lose? Then we have a short-term trader with a high risk tolerance who doesn't have money to lose. And then on the other side of the spectrum, we have long-term traders. So this is a long-term holder who would like to profit off of price swings if at all possible. And then we have a long-term holder with a high conviction in crypto, just the technology of crypto, no plans to sell, or this could be a long-term trader who is investing a relatively small amount into cryptocurrencies, at least relative to either their net worth or their investment portfolios. Also, a note about the Patreon, we are now completely sold out. If you'd like to get a spot in the future when we open back up to be a part of my buy alerts and my private community that have put me up more than 100% in under 6 months on my crypto positions, you can join my free Discord that is linked in the description, and I will send a notification out there once there is more availability. So we're going to start here with the short-term side, and then we're going to work our way to the long-term side, and you'll find that there are strategies for each and every situation here. So starting on the short-term side, this is the short-term trader looking for the fastest return possible, a high risk tolerance, and they have money to lose. This would be someone who has maybe a stable set of investments, and then this would be the money that they play with on the side. So this is someone betting on price swings, not the long-term success of a project. You care more whether a crypto goes up 10% than what it does 5 years from now. First, you need to determine the gain that you're looking for. And I've said this a million times, I'll say it again, you always need a plan. When you buy something, you need to set a plan as to what you'd be satisfied with. Are you looking for a 5% gain? Are you looking for a 15% gain? Are you trying to do a moonshot and get 100%? Setting this up ahead of time will make decisions much easier later on when those profits are actually there, when they're in your portfolio and you have the ability to sell and capture some of those profits. So here are your options. First off is a limit order. I like this one because it takes out some of the psychology. So what you can do with a limit order is place an order ahead of time to sell your asset at a predetermined price. So if you said, I want to sell this asset when I make 15%, you could set a limit order at 15% up. When it hits that price, it automatically sells. You don't even have to think about it. It's great. You don't have to have any psychology here. So here's an example. You buy ApeCoin at $5. You're shooting for a 20% return. So you set a sell limit order at $6. Once it hits $6, it sells. You make that 20%. Easy enough. The downside is that your order is not guaranteed to be filled. Just the nature of limit orders, depending on where the price sits at and where it stays at, not all limit orders are always completely fulfilled. So that's just one thing to keep an eye out for. Another option here is something that I just personally call chunks, mostly because I just like the word chunks, and you'll see why it's fitting. So this is where you sell a percentage of your holding at predetermined tiers of price increases. Of course, this takes a little bit more work. You might need to bust out a spreadsheet or two and do a little bit of calculations, but it's a solid strategy. So here's an example. You invested $1,000 into BootyCoin at $10 per coin, but you want to avoid your inner greed. So you set up this schedule ahead of time and you tell yourself, I'm going to stick with this schedule no matter what my greed tells me in the future. So here's an example. You bought at $10. You could say, I'm going to sell 15% at $11, 15% at $12, 30% at $13, 15% at $14, 15% at $15. And if it goes up more than that, you'll just keep 10% and ride it out for the foreseeable future. That way you know your gains are captured. I don't know how many people have told me, oh, if only I sold on this peak and made a little bit of money. That's how you capture those gains. Now, if you are long-term on a position, if you believe something is going to ultimately be much higher 5-10 years from now, I'm of the belief that it's better just to sit long-term and be patient, but that isn't the case for everyone, so there's an option for you. Now let's move on to the next option. This is a short-term trader with a high risk tolerance, but they don't have money to lose. As I have written here, this is not ideal. This is the highest risk. This is the YOLO folk. These are the people who are betting their whole paycheck or their whole retirement on some moonshot. This is not smart, But I know some people do this craziness. I would never recommend anyone does this, but here is a strategy to help combat this. Of course, none of this is financial advice. With this, you want to determine the gain and the loss that you can accept given that there's no new information, meaning knowing everything you know now about your investment, what loss can you accept, what gain can you accept? Is that 10%? Is that 20%? Is that 50%? Decide that right now. Always have a plan. Now, here are your options. So we have the existing strategies that we've already talked about. You could have that limit order. You could set a sell limit order at a specific price, or you could go with the chunks method. Now here are some new strategies. A trailing stop loss. This one is really interesting and can be really helpful. This is setting a sell order at a percentage below the prevailing rate. Now here is an example. You buy Bitcoin at $1 and you set a 10% trailing stop loss. What this means is if the price hits 90 cents, it will automatically sell your position, meaning your losses are capped at 10%. If Bitcoin goes up to $2, then your trailing stop loss, if it's still set at 10%, would then sell your position if it goes down to $1.80. So no matter what the price goes up to, if it drops down 10%, it will sell that position. Now, there is a downside here because most exchanges do not have this feature. In fact, there's no big crypto exchanges that have this feature just yet. And of course, you have to pay taxes on all your gains as you would with any of these strategies. Now, the next option is playing with house money. You're probably familiar with this strategy, so we'll make this one quick. After making a profit, this is simply pulling out your initial investment and just letting the profits ride. That, of course, is a great strategy to feel like you're losing nothing. But of course, if your profits are there, you are still losing money. You don't quite have the emotional attachment to that money when it's only gains that you're losing. Now let's go to the long-term strategies here. The first one is a long-term holder that would like to profit off of the swings and volatility if possible. As I have written here, this is basically everyone's goal, but it is far easier said than done. Far easier. It's very hard to time the market, especially when you're emotionally attached to an investment like a long-term holder typically is. If you're a long-term holder, it's generally because you feel like it's going to do very, very well in the long term. So you're very attached to buying and selling. But in order to do this, you want to keep an eye on volatility, support and resistance levels, meaning understand the charts and where prices tend to trend, and decide how much of your position you're long on and how much you're trading with. Now, one thing that I've found is a good strategy here is to have two separate accounts. One account with your long-term position that you're just never going to touch, and then maybe another account that has your tradable position. And your tradable position is usually going to be a smaller position, but then that way you're never touching the long term. You're not going to dip into that, and then you can kind of have some fun trades on the side. That's one way that you can do this. So here are your options. So we first have our existing strategies that can still work. The limit order, the chunks, just smaller chunks in this instance. Maybe you're not going to sell off 15 to 30%. Maybe you sell off 5% or 3% if there is a sharp increase in price. That can be a pretty good strategy, especially with how volatile cryptos can be. And then of course, playing with house money, except you can just take out a smaller amount again. Now, for new options, we could have dollar cost average out. A lot of people will talk about dollar cost averaging into a position, which is basically just making set purchases over a period of time. So for example, instead of buying $1,000 of Bitcoin today, you could buy $100 every week for 10 weeks, and that flattens out the volatility. Now, you can do the opposite of that in order to take profits and flatten out that same volatility. Instead of selling $1,000 today, you could sell $100 every week for 10 weeks. And as I have written here, sell X dollars on regular intervals. This will hedge against volatility. And then we have the last type of trader. This is a long-term holder of crypto, or it's someone who is investing a relatively small amount of their net worth or their investment portfolio into crypto. This is the easiest mentally. Basically, you do the work ahead of time, you do all of your due diligence, you check and double check, and you tell yourself, hey, I want to hold this for 5 or 10 years, and then you really don't have to think a whole lot about it if you don't want to after that point. But you do have options. So with our existing strategies, we have dollar cost average out. So let's say you love the position that you're in, you're up 200% on some long-term position, but you're like, hey, I want to slowly pull out $50 a month. You could dollar cost average out on that position. That doesn't mean that you hate that position. Another option would be selling a portion if you need to buy something. So you've been holding something for 10 years, you want to go buy, I don't know, a four-wheeler, a jet ski, something like that. You could just simply sell a portion of that. Just make sure that you account for your taxes on this. And then of course, HODL, just holding as long as you feel you need to hold for this tech. The thing about crypto is we really don't know where this is going to be in 10 years from now. And we don't know who's going to be the top dog, but all I can tell you is it'll be extremely exciting. I hope that this video helps you capture some juicy profits. I would like to thank you so much for watching, and I hope you have a profitable day.